Hello and welcome to another Smaulgld podcast. Today is August 15th, 2019. And today's topic, bank alternatives, saving in a negative interest rate environment. Today we're going to talk about some alternative places where one can keep their money and not be subject to, in a sense, confiscation from negative interest rates. Now, this isn't investment advice, and of course, none of the items or places you can put your money that I'm going to mention are insured. Remember, in a bank, you do have the FDIC insurance for whatever that is worth. All right, so let's take a look. We're going to break it down into a few different categories. The first are going to be cash and cash equivalents, and those are going to be places where you can put your money and not lose the value, at least the nominal value, of what you put in. Then we're going to talk about some areas where you might make some money, you might lose some money if you put your money in those particular vehicles. And then there's a couple of places where you can put your money and actually pretty much be assured that you will most likely make some return. Now, we're in an environment right now where if you have negative interest rates, you know that that is a problem. And the reason it's a problem is currently we do have inflation. So if you are getting no return on your money, or you're paying to have your money held and you have a CPI, 1%, 2%, at least the way the government measures it, you're in the hole. So you will actually lose no matter what. Now, generally what that makes people do is put money into risky assets. Well, not everybody wants to put their money into risky assets. They want to maybe just preserve maybe they don't have much to invest. Maybe they just want to preserve their current cash position. They just don't want it subject to losing a certain percentage every year, both on two sides. On the side where they have to pay to store their money because of negative interest rates, and then pay higher prices with the limited amount of money that they have left over. So let's take a look now at what's going on. I mean, this is something with negative interest rates. We've been covering this for a while now. And even the chart I'm showing you right now, there's almost this massive inflation in the amount of negative interest yielding bonds and the percentage of overall bonds out there. This particular chart put together by, I don't know if he put it together, but he pulled it from Deutsche Bank, Gabor Gorbaks, shows that 27% of the bonds in world trade at a negative interest rate, and that's at a $15 trillion amount of bonds out there. Well, I saw a chart that we showed it yesterday or 2 days ago. It's now at $17 trillion. So it seems that it's becoming, right now, it's more than 1 in 4 bonds are paying no interest and are paying a negative rate, which means you pay the borrower. You pay the borrower when you take out their bond. So this is definitely a trend, and it's definitely going to lead people to make some changes. I don't think people have been lazy perhaps, and they're just putting their money, and they're happy to put money into anything that they think is safe, even if it means they have to pay to park their money. Now, first thing you can do instead of keeping money in the bank is obvious, and that is you could keep your money in cash. And one of the things the banks have wisened up to in recent times is they won't allow you to keep cash. Most banks won't allow you to keep cash in a safe deposit box, because why keep the money in the bank in a checking account or a savings account that pays no interest or actually charges you a fee to each month to hold the money, like $14 a month at Bank of America, when you can get a safe deposit box that you might already have anyway to keep your personal papers that need to be safe from fire. And the safe deposit box isn't that expensive. If you could put cash in there, well, you might as well have it in there. Instead of going to the bank and going to the teller or the ATM, you go into your safe deposit box and you pull out your cash there. I think banks don't allow that to happen. So the only other alternatives, you can hold your cash. Well, that's a pretty obvious one, and the risks there are it's not insured, you could lose it. However, that's the same when you take the money out of the bank. It's no longer insured. It's just some people might take more money, more cash out of the bank. Now, another thing you can do is, we mentioned the other day, are Gift cards. Now, if a gift card has no fee, well, then you're ahead of the game, because now you're assured of, if you buy a $100 Amazon gift card, Walmart gift card, Starbucks gift card, a Olive Garden gift card, somewhere where you're going to spend the money anyway. So instead of having it in the bank and taking it out and then go and spend it at those places, if you can get a gift card with no fee, well, then you hold the money you lend the money to Amazon or Walmart or Olive Garden, wherever the department store that you know you're going to shop at and you know you're going to have a need for. Now, even better than having a gift card, because remember, a gift card in a sense is a bare item. Lose the gift card, it's like losing cash. Some gift cards do have online buying, where you can then store your password and you can use it on your phone, or you can just purchase directly from your computer or phone. Now, just as cell phones replace landlines, as we're talking, you can see how cell phones might replace banks. You can do a lot of, not your banking necessarily, of course you can do banking from your phone and they encourage you to do that, but you can also transact directly from your phone, directly from funds that you have on your phone, whether in the form of gift cards or perhaps even things like stable coins. Stable coins like what supposedly Facebook is going to come out with, but forget that. Right now there already are dollar-based stable coins that you can use from Coinbase, from Gemini, from Circle. Again, none of this is advice to do this, but you can store stable coins on your phone. You can also get the Cash App or any other type of payment app where you can put cash onto your phone, for example, on the Cash App, and you can spend it from there. This way, it's not in a bank. Your bank, in a sense, or your cash or your position is on your phone, and it's not anywhere near a bank, and there's no fee that you pay to hold it in many of these cash apps. So those are the ways where you can hold a cash value and not have to pay a negative rate or not have to pay a storage fee. Now, there are a couple of ones where you actually can make some money. When I say make money, I mean it's possible there might be some upside. Well, one of them is copper. When I say copper, I don't mean going out and buying copper bullion. If you have copper pennies, and this does take a little work, and it kind of takes some of the, it's not like you could just go out and get copper pennies. You have to sift through pennies and find the ones pre-1982. But those pennies they're still worth a penny, but they have currently 1.7 cents worth of copper in them, which means if you have $100 worth of copper pennies that you've sifted through, you actually have close to $170 worth of copper. But no matter what, you have $100 worth of pennies. The issue with them is that in order to get your $100 to spend, you can't lug around $100 worth of pennies. You have to bring them to the bank, and now you're back to the bank again. Then you get your $100 bill, your $50, whatever you're going to get. But it is a way of storing your cash in pennies. And if you're going to store it for a long period of time, I suppose you can store a couple of $100 worth of copper. And then when you needed it, you can turn it in and get cash. Or it is possible, like they did with the silver coinage at one point, they may say that it is legal to melt down the copper pennies. In which case, if the price of copper goes to 2 or 3 cents per penny, you may, in effect, make money on holding on to your copper pennies, and at a minimum, they will always be worth 1 cent. Perhaps a better bargain is the nickel. Storing nickels, obviously, it's worth 5 times more nominal value than the penny. And the penny, while you have to find 1982 or earlier pennies to get the value of the copper, because if you get the zinc pennies, they're only worth a half a cent. And even so, you can store pennies. They may only be worth a half a cent, and there may be no upside because the price of zinc would have to double for them to be worth their nominal value. But still, you can store pennies, and they would still be. That's the same with any face value U.S. coin. You can save quarters, half dollars, dollars, dollar coins. They'll still be worth, that's the same as cash, really. They'll still be worth the face value, but their metallic value doesn't come close to being what's stamped on them. But nickels, however, are 75% copper, 25% nickel, and they currently right now are worth 4.1 cents. Now, that's below the face value, but nickel once in a while goes on a tear, and the same thing could happen with nickel that might happen with pennies, is they might one day say you can melt these nickels down. And nickel is a very important metal. In fact, nickel was so valuable to the war effort during World War II, they actually replaced the nickel with silver, copper, and manganese. So they did not have nickel in the nickel in 1942 to 1945. So nickels are also a way to store, but again, you have the same problem. They're bulky, and to have any real value, $100, $200, you do have to have a fairly heavy sack of nickels. But it is a way of holding on to your value and potentially having an upside. Although I wouldn't place much stock in them having an upside, because it doesn't look like, well, you never know. They may decide to pass legislation to allow you to melt them, but if they don't, you at least have the value of the nickel. In fact, Kyle Bass famously purchased $1 million worth of nickels, had them shipped. I think they fill up an entire garage. And he's counting on the fact that one day those nickels will be worth something. Now, I did shows on this. Is copper money? Is nickel money? It was more focused not on how they could be used as a way of avoiding negative interest rates, but whether they have the characteristics of money. I'll leave the links to all the videos I reference in this particular BitChute on Smaulgld.com, and there'll be an embedded BitChute, and you'll be able to watch those from there. So you can watch is copper money, is nickel money. The next one is, are whiskey and cognac money? Now, spirits. This one is not a guarantee to make money. It's not a guarantee to lose money. But if you store whiskey, cognac, or spirits, not wine and beer, because they can go bad after a while. You have to store them a lot. Whiskey and cognac and vodka that are properly stored with the seal on. The alcohol is not going to evaporate. It's not going to get any better. It's not going to get any worse. It is a good barter item, and you could store your value in the whiskey and the cognac and the spirits. The danger there is you dip into your savings, and you dip into your savings more than you should. So you have to consider whether that's a good way of storing wealth. I think for non-drinkers or people who don't drink spirits, it's probably a better idea to store your wealth, some of your wealth. Again, this is not advice, financial advice, to store your wealth in any particular vehicle. These aren't even investment vehicles. They're savings vehicles, if you care to look at them that way. But I'm sure a case of vodka or a case of good whiskey or good cognac you might hold your value, and with minimal care and just making sure the bottles don't break, you could probably sell it. And of course, in a barter situation, if you have the ability and a funnel to put them in small bottles, you can trade them. So that's another place you can store value. Now, I'm not sure it's easy to sell whiskey and vodka in a non-barter environment. I'm not sure you can just bring them back to the stores or find places to sell them. You may have that issue. There's rules on selling alcohol and so on. So it's not ideal. And the other way you can look at it is if you are a person who does imbibe in spirits and you imbibe in them moderately and you're going to drink them anyway, and you know over the course of the next 10 years you might drink 10 bottles of whiskey, might not be a bad idea to buy 10 bottles of whiskey. All right, what else do we have? Well, I think this one is perhaps the best. Stamps. Now you say stamps. What do I want with stamps? Well, the U.S. Postal Service, in order to bring revenues forward, does something what I think is quite foolish. They know they're going to raise the rates of the postage rates. They do. They always go higher. When they run out of money, they just raise the cost of the letter. They're the only business that can do that. Well, we're not doing very well this year at our restaurant. Why don't we just raise the prices? And you're going to have fewer customers. They don't care. So they raise the prices all the time. But for the last, it must be 20 years now. Maybe it's 10 years. I don't know. But these weren't around a while back. They have a thing called forever stamps, where you pay the current face value of a stamp. I think it's 50 cents for a first class stamp. I purchased these the other day. This is the frogs. You can see the frogs, and it says forever. It's frogs forever. These stamps today are worth 50 cents a piece. Now, the great thing about the forever stamps if you have any need for postal services and stamps, there's really no damage done in buying postage stamps in bulk. They don't take up a lot of space, and they are divisible, and you use 50 cents at a time, and they'll always be worth whatever the current rate of postage is. Now, if the rate of postage were to go down, which in the last 60 years it has never done, they would still be good for a first-class stamp. But if they go higher, as they usually do, if they go up 5 cents, well, that's a 10% gain you have on your stamp. So stacking stamps seems like a very good idea. And again, with all of these savings devices, the stamps, post office could go out of business. Then you're stuck with a bunch of frog stamps. Your liquor could spoil somehow. You can get, the bottle could open and the alcohol can evaporate. They can get stolen. All of these do have risk, but they're really just holding risks, theft risk. The diminution in value risk isn't that great for things like whiskey, but it could be. If they outlaw whiskey, well, then you're not doing well. So there are risks to holding any asset. Now, the risks with the gift card we didn't mention are bankruptcy of the issuer. Walmart goes out of business. Amazon goes out of business. Starbucks goes out of business. Well, then you're out of luck. Now you've got a gift card for a company that's not going to be around. Chances are that those are more remote than maybe, say, Olive Garden. I don't know the finances of Olive Garden, and I've never even been to one. But if that's one of your favorite restaurants, it's probably more likely that Olive Garden would have, because restaurants are a tricky business, have financial difficulties than Walmart. And again, that's why you wouldn't buy thousands of dollars worth of Olive Garden gift cards. I think a basket of gift cards spread your risk around. You have a gas card, Amazon card, Walmart card, Dunkin' Donuts card, whatever places that you frequent on a regular basis. I'd imagine you could spread your cash around that way. And as I mentioned, having it online or having the ability to access your cards from your phone, I think, is a very big advantage. Now, the stamps you can't, they are a bricks and mortar style product. You can't access those from your phone, but I think the stamps, to the extent you do have need for them, are a very good buy, because they're only probably going to appreciate, and they're still always going to be worth the price of a first-class stamp. Now, it could be that at some point, maybe you have no use already for stamps. Maybe people will have no use for stamps in 5 years whatsoever. Maybe the post office will close down. So these are things to think about. I would think 20 years, when they first came out with these were probably a big no-brainer. The other thing I don't know, I didn't check, is whether you can resell these. I would imagine there's some arbitrage to be made here. You buy $50,000 worth of these stamps, and then in a couple of years, you know that the post office is going to raise the price. Doesn't cost you much to store them. You could probably unload them, for another 10% more. It's an easy way of making $5,000. Now, I'm not sure anyone's ever done that. I'm not sure you're allowed to do that, but I would think the government would prohibit that, but I'm not sure they do. But anyway, that's, again, not advising you to go out and arbitrage the price of stamps. I'm just suggesting that if you have need for stamps and you buy, and you know you're going to need stamps, there's no harm in buying a couple of books. The only risk is the post office goes out of business, or somehow they lower the price of stamps, which might be remote, might be considered remote at the moment. Now, the other thing people can do, but now you're getting into the first group that we just talked about. Those are items that probably aren't going to change very much. And that's why we selected them. I think the stamps might be the safest. That's just my opinion. Cash is probably also safe. You just have to figure out where you're going to hold it. Now, the other things which I think add to their allure as something that someone might potentially want to have are gold, silver, and other cryptocurrencies. Now, of those, I think gold is probably the most stable, but even so, there's no guarantee that the price of gold will hold its value, at least short term, and there's no real guarantee it'll hold its value long term. So there are years where gold does not hold its value against the dollar. However, in a negative interest rate environment where there's then also inflation, you would expect it to do better than the dollar and better than other fiat currencies. Silver's in a similar boat, and the reason for gold and silver to outperform a dollar or a currency in a negative interest rate environment where there is inflation is they're in a sense non-inflationary. Even though you may increase your gold mining or silver mining to meet demand, there's still a lot of demand for gold and silver is met by existing supplies, and they're not really growing much. They only grow by the amount of the additional supply that comes on market. So they should be able to be on an apples to apples basis deflating, versus the dollar should be inflating versus gold and silver, and therefore you should be able to maintain your value and actually make a nominal, potentially large nominal gain in both gold and silver. Again, not investment advice. That's just the thesis. It's held in the past before on the basis that more money being printed, inflation being, the real rate of inflation being greater than what you can get on a yield on a bond, which is negative, and you have a positive rate of inflation and negative interest rate, then generally the prices of gold and silver go higher. And then finally, much more speculative, no one quite knows. Some people insist they know. I would not insist I know this at all. Some people might say that cryptocurrencies like Bitcoin and Litecoin are limited in value, and therefore they're just like gold and silver. Now remember, the gold and silver thesis is just that. It's not a guarantee that if you have negative interest rates and you have a positive rate of inflation and you don't have any real significant increase in gold and silver supply, that they're going to go higher. But there's a logic to it based on history. There really isn't a history on Bitcoin, Litecoin, and other cryptocurrencies, but the theory is the same. They're both limited in value, and the theory is actually for Bitcoin and Litecoin even stronger, to the extent that they're even more limited in creation, potential creation, than gold and silver, because they have hard caps on them. But then the flip side to that is that there's really no history that there will be the demand for them going forward, irrespective of their limited issuance. All right, that's about it. Let me know what you think, whether you think cell phones will replace banks, whether you've got any other ideas of places where you can put money relatively safely and avoid paying the negative rate, and possibly even protect yourself against the additional inflation. I think anytime you start to try to make a return above inflation, then you're pushing yourself into maybe higher yielding bonds, into things like gold and silver and cryptocurrencies. Then in stocks, you start to get speculative. The purpose of this discussion was really just to see if we can find places where you can hold cash in a way that you at least do better than losing a certain amount of your money due to negative interest rates. Let me know what you think.